Hello guys, glad to have you on board again. Today, in order to determine that week, we're going to have a look at the weekly ongoing scenarios, just an overlook at what the candle closes may look like, what important level might have been broken during the week, and things like that. Obviously, regarding the cryptocurrencies, still the same warnings. There is still Saturday and Sunday to price in, and now that the futures market is out, those markets are, the futures market not necessarily out, but even the CME, who still are trading the futures contracts for Bitcoins, basically have a very, very low volume. The volume is basically disappearing out there as the speculation just pours out, which is exactly what we were expecting. So you may expect the CME to basically interrupt the quotes at some point in the near future as well. So yes, we're out of the speculative phase on Bitcoins. That doesn't mean volatility cannot be at play. We could still have some unexpected downward volatility, like a stop hunting pattern or something like that. But still, I would say, and many people are expecting this. That just means it doesn't happen at all. So anyway, I still stand with that. I think the buy and hold is the only rational stuff to do right now. It's just buy and fucking hold, and don't even look at the charts. I would say even the weekly chart is dying right now, and it's been pretty fucking long time. Like I said, I thought we had some kind we had this pattern back then, but apparently we clearly don't. I mean, this is nothing compared to what we're experiencing right now. So this is definitely the desert crossing phase at play, and it could be very painfully long. So please avoid speculating in this market. I would still suggest that we need to price in back to this previous area in order to just assess that the thing is terminated, and then we're just going to dive in between support and resistance. But I still tend, like I said, to suggest that most likely the 14.6% retracement should be at play in both Ethereums and Bitcoins. So probably just an upside to drive some euphoric in that market. Don't forget to profit take on the speculative of your area of your trades, but the long-term scenarios have nothing to deal with those resistances. You want further retracement to get there. So nothing has changed. It's just that this is how it is. In a more intraday perspective, we had the downside expected yesterday. It's been driving people crazy as usual, because there's something happens when nothing were happening back then. But first of all, we're not even breaking the previous lows in a weekly basis, so it really feels like a non-event to me. The question is it going to die, or are we going to purge down to lower valuations? I don't even know. All I can tell is that this is a range, and we're right in the fucking middle of this range. So people try to rationalize something that just makes no sense. We clearly see the range structure in here, and just put it that way. I mean, we've reached out to this high. All right, take a range and put a range out of this. All right, that will give us the potential to go a little bit lower. I still tend to suggest that in a risk management perspective, we should at least wait for 134 to be tested before eventually trying to catch up on this potential triangle bottom. But I would just say, why do you absolutely want to buy this triangle? Triangles at very late stages, like we could be, just gives absolutely no reward for speculation. So why would you take a risk for a very crazy narrow reward? At this late stage triangle, I suggest either you bought the first building of this triangle, and I would suggest, okay, if you got this, you put it at break even, and you just wait for the triangle to terminate the completion, or you just wait and trade the breakouts. This triangle is a structure that compresses prices, creates squeezing structures, and obviously will trigger breakouts. These structures cannot be stable. They always break one side or another, and they will trigger a just burst in volatility. Could be a short-term burst or a burst that will be followed through. It is hard to say, but all I can tell is that anticipating this doesn't even make any sense. It's the triangle. It could go up or down. You don't even give a damn shit. All right? So I suggest you just do nothing regarding cryptos. You wait and just let it go. And that's all I could suggest. Now let's have a look at the stock market. So we've got some pretty volatility out of the euro area session right now. I mean, instead of pullbacking, we're going totally on the opposite way that the US have been opting for. So the divergences keep on digging a little deeper down the ground. It means like nothing makes sense anymore in this market. US is going up, Europe is going down, China is going sideways. So it's just there's not even a sense of rationality in here. We're just gone absolutely crazy, volatile, and we're not even pricing things in. All we do right here is just volatility. We're just trying to take down stop losses, and that's not even a market. That's not how the market is supposed to behave. But that's how it does right now. So what I would suggest is just my job is to adapt to the context. I made a video yesterday showing you that what I have in front of me just doesn't make any sense anymore. So even technicals doesn't apply. So technicals doesn't make sense. Fundamental doesn't make sense. Psychological patterns doesn't even make sense. So it feels like I'm playing a game that I don't even know the rules anymore. So it doesn't even feel like a market to me. All right? All I knew and all I'm trading is just absolutely being proven wrong right now. But it happens. And let's be honest with that. It happened in the past, but never that long. So all I can tell is that at some point, every strategy, and most likely when they're technically based, like mine is, then the thing is that technicals are not the only thing at play in the market. So at some point, markets will be rational and technical strategies will be put in pain trades. Just exactly what's been happening recently. The market is just fucking up technicals and it's been putting me into a pain trade. Obviously, I can't be pain traded because I accept chaos and I know those structures will be at play here and there in the market. I'm just stunned to see how goddamn long they happen. I've never seen a divergence happening in the weekly charts. So it's the first time ever I'm seeing the market diverging for consecutive weeks without even pullbacking, without even questioning this. We should have two sides volatility, but we have just one side. It feels like the bears are non-existing anymore, and it's just about whenever we can just grind a little bit higher, we do with a strong volatility, but then nothing happens when we consolidate. So that's the big problem, because when I see the market just inhaling without exhaling, I kind of tend to say, oh, we do have a problem and we're going to pay this hard. Moreover, the feeling I have right now with this market, and I'm not talking about gut trading, I'm talking about how I feel regarding the structures I have in front of me in a technical and psychological perspective. It's got to be a shock. I'm sorry to say that. I don't really like saying that kind of stuff and talking about death and everything like that, but it feels like a dying patient at the hospital who's just going to have a final seizure before getting into cerebral death. So what I would tend to feel is that, yes, it feels like this seizure, the time when the person is going to just go crazy before he's just going to die. And that's the feeling I have with this US stock market. I mean, we're basically having some of these things that doesn't make any sense. I mean, in a technical perspective, it's just like I say, it's irrational moves, like a seizure, just preceding death. So we had the early signs in here. I mean, this is not normal. These kinds of pricings absolutely aren't normal. This pullback makes absolutely no sense. I mean, I'm just going to highlight everything. This could be a normal pricing. Go up and down. We try to consolidate. I could really well understand this. Since this, I don't make any sense. I mean, this kind of pricing, absolutely abnormal. All right, we shouldn't have that kind of volatility just to go stop hunting. Normally, stop hunting is a pattern that builds itself and breaks. Now we don't build anything. It's like brutal, brutal, okay? Then we've got the opposite brutal. Then we've got this, which is pretty violent. But this is breaking through support, so this is kind of normal. Which is abnormal is this reaction. V-shaped structure, out of nowhere, bam, we obviously do something in here. So this wasn't necessary, but this area is pretty weird. It feels like what the market tries to do in here is just to bring up sentiments. It's playing with emotions. And what I tend to feel, like I said, I think it's just the dying patients who know the end is here, the end is coming, and is just fearing it and having irrational, erratic behavior. The body is just surrendering. So I would tend to say the market is not just the body. Okay, the market is more like the body and the soul, and some people will say the soul survives forever and things like that. Let's call it that way, all right? The market is not going to die. It's not going to be dead by tomorrow. All I can tell is just the market structure supporting the current prices is just probably about to die. Sorry. So I think like what we had in the latest couple of days or 3 days, I mean the days preceding the Feds, and this erratic move yesterday, like I said, even the knees has been warning traders about very dangerous volume-weighted price movement. Like yesterday was kind of the panic sessions, all right, that we normally see to the downside, but the panic session happened to the upside. It's incredible. It's like the market were surrendering to the upside yesterday. And that's kind of, I think, the final move, the final move that got to take down so many stop losses. And I think mine are still safe at the moment. I don't know if I'm going to be able to survive this very dangerous stop hunting. And like I said, to me, it feels like a human being about to die, whose body is just trying to fight back, but the inevitable. I mean, when you're at the end of your life, when obviously all your organs are just going to let it go. I mean, you know it's going to happen. You will obviously let it go at some point, but it's normal for humans to fight that. And like I said, talking about death is not really funny, and I don't make any fun about that. I know it isn't absolutely fun, but the thing is that that's the only thing I can compare what's happening to. Like something about to die that just fights back and hoping it will change something, but it just feels like inevitable. So what we have in here is probably just the final stages, erratic stages, and I don't nearly want to be caught in this. So being stopped out of this would be just the worst case scenario to me. So like I said yesterday, I'm ready to absorb a little bit more volatility because that just doesn't even make sense to me. I can't even put a stop loss in that kind of market because we're not even rational in here. And I feel like the end is obviously going to be like a really violent reversal. I'm going to be honest, I didn't even talk about that yesterday, so that's the only thing I'm going to say right now, and we're going to conclude with this. The only thing I can compare to is this, and even the last time, this was pretty fucking deep irrational. 164 days to go 18% to the upside, and I've never seen anything like that in my entire career, despite buying the dips in 2009. So after a recession, we didn't even nearly recess in here, but it feels like the market is fighting death anyway. So in here, we've built a dip of 22% in just 87 days. So half the time, and we've gone even further in terms of validation or valuations, even further than this irrational, stupid move. Look at how we paid the price the last time. That's what we paid the last time. That's what the market did, and it wasn't pretty. If we have to pay, imagine that we've erased almost 61% of this move instantly, almost instantly, as it took just 8 days to go there. Imagine that we've gone twice faster in here. Imagine if the correction has to be twice faster as well, correcting 61% or 76%, going in this area in less than 5 days. That would be the death I'm talking about. If the body is just dead, then we're going to be retracing 15% in just 5 days. And guess what? That would sound absolutely fucking normal to me. Everybody will just drive crazy. Will say, oh my God, what's happening? This is a violent pullback. Let's buy the dip. No, it's just the body is dead once and for all. And the difference is back then, we were searching for a market top. Now we have it. We have a structure suggesting the market top is at play. So if we do fall 15%, I don't nearly think the market will ever recover from this. I think we're just going to die in here before breaking lower and keep on breaking lower and lower and lower. I think we're heading toward a crash. The question is, how will the economy behave? The economy is not meant to support that much volatility. Let's be honest. I mean, in just less than 6 months, we've been purging 20% of the economy. We're talking about something that worth $23 trillion. So let's imagine what represent 30% of it, 20% of it. Can you imagine how enormous this is? Now just think about it. The crypto market, just the Bitcoin, is approximately $100 billion. Some people say it's enormous, and you get crazy when Bitcoin is moving 30% a day, and people call that erratic trading, like, oh my God, it's crazy, we shouldn't even trade that stuff. Then, now it feels like stocks are even crazy more than that, because we can move, like, what we've been doing the latest few days and weeks is just, to me, absolutely nonsense. And we've been just swiping up and down 5% of valuation. So 5% of $23 trillion. You know, can you assess how much this is? This is $1 trillion. So $1,000 billion of valuation that comes and goes just like that. Can you compare this? It's 100 times what happens with the Bitcoins. So it's like we were creating and destroying the entire Bitcoin valuation 100 times in just a couple weeks. And that doesn't even matter to traders. It's like it's normal. What's happening right now isn't a problem. No, we've got irrational volatility out of very dangerous levels. The body might just be dying and giving its final breath. And it feels like people are catching up with the news flow. Like, the news flow doesn't even make any sense of this. So I've seen articles just saying one thing in one day and the opposite thing the other day. Like, the Fed has been picking up the market, and now the Fed is creating a new bull side move. I mean, goddamn crazy this is. How do you want people to follow on this? It's not abnormal. The economy cannot even follow this. So don't try to make it rational. All I can tell is that if you are, like me, reaching out the limits of your money management, then don't overextend that forever. But I suggest you need to be a little bit more cutting some slack for the upcoming days, because what we have is absolutely irrational. And I would suggest if you can take it, just take it for a couple more days. It shouldn't be lasting way longer than that. But it's irrational. I mean, putting a stop loss at the market right now is just as crazy as it could be, because it makes absolutely no sense. What we're doing in here is really, really, really deeply dangerous. And what we did yesterday, just, I think, it is nonsense. We didn't even make the candle close on top of the 85.6. So, to me, in my honest perspective, I think I would never expect the market to go there, to break those previous highs, because it wasn't necessary and it wasn't logical. But we're not even logical right now. So what we've done yesterday could just be another fucking trap. I mean, the final upward move, irrational panic buying to get to the stop losses, just like we've done back then. Just like this session, and guess what's happened afterwards? The market reversed and take down the entire rally in just a few days. And I think that's what we're about to do. So now let's jump in, because I'm not just talking as usual. I need to have things validating my scenario in a technical perspective to avoid any bias. And to me, the 1 hour chart time frame really gives 1 hour and 4 hour. I mean, even in the 4 hour perspective, the odds are not bullish at all. I mean, what we're having here is a divergent market that's been confirmed by the latest 4 hour close. So just 1 hour ago, we just gave another bearish signal. So it's the second bearish signal. So I hope you didn't get caught up by yesterday's highs, because to me, it makes no sense. This is just a divergent market. Could push another day in here later, just a little bit higher today. But if we just fall out of this, and if we break down that support, then this would just have been a divergent push of the market in a 4 hour context at the end of a bullish cycle. So in here, we need to search for selling entries. We have a clear signal, a divergence. I anticipated the reversal before the Fed, thinking that we could break down with the Fed. What we did, but apparently the market just wanted its final upward move to fuck up the aggressive bears. In a 1 hour chart signal, like I said, stop hunting pattern. If you do assess the technical in this area, this looks like a range. The crazy fucking type of range in which we are making lower lows and higher highs in the same way. Like I say, the final seizure with crazy erratic behavior. But still, Stop hunting signals that the market is pricing that range with odds to the downside, and we just break the highs to create a stop hunting pattern. Because normally this pattern says your stop losses are safe if you put them at the market high. But yesterday was an irrational session, abnormal session. Reason why I told you to put your stop losses further away, not to get caught. All right? And I think that was a good choice, I told you too. Future will tell. In the next following days, we will have the answer to that question. If the market keeps on dying to the upside, then I'll just let it go. Honestly, I will. But if the market is keep on acting irrational and ups and down into that very dangerous structure, I think it's just the final burst. The final breathtaking after the market will be probably dying into that even bigger exotic structure. Divergent, divergent wedge structure. If we die in here, and if that is the final wave, or even if today we're about to do this and this, afterwards, I mean, the bottom is not going to be there. We're going to go straight line to the bottom in here, I think. Because this is absolutely fucking irrational. And I think next week, this is what is pending. An absolute brutal reversal, straight line, as stupid as we've done in here. But just know one thing, the market goes down faster than it goes up. So we've gone up, we can go down way faster than that. And that wouldn't even be abnormal. Because that would just be the abnormality answering to previous abnormality and everything like that, just adding on top of the other. The market is lost. But the thing is that the market is lost and people try to make it rational. So people try to make the upward move rational, thinking that there is going to be more upward move therefore, because the market is king, and as prices gone up, and as prices have been trapping the bears, it means the bulls are full strength. That's what people think. That's what the news flow is saying nowadays, saying that we tried bearish, it didn't work out, so let's go bullish instead. I don't nearly think that's a rational choice. So if you go bullish, it must be for just one reason, because you've gone too far in your money management, and that rationality forces you out, because there's a simple lesson to take out there. Even if you get stopped at the market top, you're going to be pissed off. You're going to be real pissed off, because you're going to say, oh, God damn it. You're going to feel like you've been the victim of a theft. It's exactly what you feel. Now, let me tell you something. If you feel it that way, then just destroy this sentiment immediately, because what's going to come out of this is just negative. What it means is that you're going to be angry, and being angry when you trade is the worst possible emotion. Angry, fear, revenge. If you have all of this when you trade, you're not even trading. You're emotionally driven trading. It's fucking dangerous. So destroy that emotion right now. It's not going to bring anything better. It's just going to make things even worse. What you may feel instead is that what you've done is the only irrational thing to do, and that's probably, even if that feels to be painful, that's the only thing that will ensure your survivability in the market in the long run. Let me tell you something. If you've been risking more than 20% on that scenario, okay, you would say, okay, out of 20%, why not 25? Why not 30? Why not 35? Why not? If you take that decision to let it go and to accept more and more and more risk without any limit, you might be doing well today, which means, I don't know, but let's imagine the market tops out and you take the good decision, meaning you took more risk, way more risk than you anticipated in the first place, and it goes right. Good. What are you going to feel? You're going to feel like when you fight the market, you do have the final word, and you do be proved right in the end. That lesson is going to kill you someday. Definitely will. Sooner or later, which means you might be making short-term gains for a couple days, couple weeks, couple months, maybe a couple years if you're really lucky, but sooner or later you're going to lose it all. And the end is inevitable in this case. Sooner or later you'll be caught up. And if you are caught up, you are probably going to lose it all. Because if you have that kind of feeling that when you fight, you're going to be proven right. Yes, it's right at some point, but there is a limit. You don't risk it all. Never. And you don't even risk more than 20%. That's absolutely nonsense. I'm about to risk those 20%. Probably I'm going to risk those 20%. But I'm risking them because I have previous gains that exceeds those 20%. So all I'm going to do in here is surrendering previous gains. I've been working for catching that top in the US. I've been taking risks. I've been taking previous gains, and I'm just reinvesting those gains because I think the big short might be there. If it's not, I'm just going to lose a shit big part of my previous gains. Probably 60 or more than 60% of my gains, which means I'll just have probably 5K available for a next short entry later on. That would be a shame. I worked fucking hard to get that money to be having some leverage in my big short entry, which I'm trying to make for a few weeks. If this works out, I'll just be paid for a nice job, even though I pretty damn do it. I could have done way better than I did, but still, my job is done. I mean, now this is what I have, all right? My average price is here. Let's even a bit higher because I took a reinforcement yesterday. I think I'm close to 2,800, maybe, I think in this area. So it's not that bad. It's not good because if we go there, I'm going to take quite a loss because, yes, it is not that far, all right? Let's consider this. All right, let's count. God damn it. Yes, it's a 2%. But I'm leveraged 3 right now in the market because I'm maximum leverage and I had to take additional entries, which means this loss, no, I'm leveraged 2, sorry, I'm leveraged 2 in the US, but the thing is that I also have Dow Jones and I also have NASDAQ, but I'm maximum leverage. I'm leveraged 2, and just the SPX could probably cost me approximately a 5 to 6% loss if I get stopped out. So 6% loss, plus the loss I have on the Dow Jones, and the loss I would have as well on the NASDAQ, mean I'm going to take a 10% loss just by the equities indices. But this is not just equity indices. If things goes wrong, I'm going to take a loss in the VIX. I'm going to take a loss in some of those assets as well. So I said probably a 10%, a 20% entire loss to be expected if this scenario goes wrong. I was ready for it. That's the risk I was ready to take. I take the choice. Now future will prove me right or wrong. All I can tell you is that I told you yesterday that we will pull back to this price. We've done that. I'm pretty fucking curious about what Wall Street is going to do this afternoon. I don't even know because Wall Street isn't even rational to me. Just look at that. We're losing 1% in the euro area, just 1/3 of it in the US. So is that normal? Is that rational? Absolutely not. Does that make sense? Absolutely not. How is this going to end? I goddamn don't know. I'm just doing what I can do as we're trading chaos right now. The question is, how much chaos am I ready to take on my account? My account cannot sustain an indefinite level of chaos. So, yes, by the end of today, I'll probably try to make another video, or at least I'll get to Twitter or Telegram to tell you if I do take my loss or partial losses, like 50% of my loss just to reduce my leverage and put my stop losses a little bit further away for next week, or if this trade is validated. Depending on the weekly candle close, I'll be able to give you that information. But right now, right here, right now, I cannot do anything because I don't know what the US are possible. They can do anything right now. It's not even rational. We just left ground. We're flying close to the sun until we burn the wings. But the question is, how far from the sun are we? Which is the how high is going to be the melting point? I don't know. All of this I don't know. Is related to chaos, and chaos can be handled with a strategy, but not without limit. So if I do reach my limits in the next couple of days, I'll do what I just said. I'm not just bullshitting and talking things I don't do. I mean, if I have to get the hell out because I reach out my maximum possible loss, I'll do. I'll take it, and I'm not going to be angry. I'm just going to say, oh, you know what, really, fuck you. But guess what? It's just a battle. I'll win the war anyway. I'll see you in the next battle, right? So why do you see things like that? All I see is that, yes, the market may take me 20% away. And if it does, all I can tell is that, great, you took a nice, really, really nice battle. You really well played. But that's a poker game. I'd rather like to have chips available for the next battle. And then maybe I'll fuck it up at the next battle and double my stack. It's simple as that. And I'll recover way more than the 20% I just gave up. So all I care is to be right in the end, but not right in a who was right, who was wrong. Be right in the condition that I made more money than I surrender, and didn't take too much risk in between. See it that way, and you'll see how a trader sees the market. I don't give a shit. I'm not going personal with the market. If they fuck me, I'll just say, great, you're really, really good at it. I've never seen anything like that in my 8 years of trading, but there's a first one to everything. So it might just switch my new standards about how crazy fucking far the US can go, but still, that's possible. All right? So don't misunderstand me. Everything's always possible. Chaos can go way further than you could imagine that. That's the first in 8 years that I've seen markets going that crazy. And I thought 2017, 2018 have been going, and I've been pushing my personal limits already further away. I never thought we could be going even further than that, but here we are today. And we'll see how it ends up. I'm pretty damn sure it's not going to be pretty, because all the previous examples in which the market has been pushing through my limits, it never ended well. It's been happening early 2018, it's been happening late 2018, and I pretty damn forecast it's going to happen 2019 as well. For the reason I showed you, the VIX isn't nearly following the move. The VIX is showing some very dangerous parabolic price structure, and some very high and dense areas starting mid-April to mid-May. So something ugly is probably going to happen in between. I just hope I'm going to survive until then. All right. Later, guys. I'll catch up on you later today. So obviously, AUDNZD as well is pretty interesting. I hope this one is going to pay for that bottom. I never thought we would be pullbacking in here, but we do. So anyway, I'd like to see this market catching up on the resistant context to forecast some trend trades afterwards next week. So for now, I'm still waiting for prices to confirm the speculative entries done. Obviously, if we break down, I'll definitely get the hell out. But for now, I don't think it's nearly doable. Euro dollar is playing fucking sideways, one way up, one way down. It's every day we do something different. It's absolutely unable to read that market. What we do is just randomly fucking up everyone. It's just one more example of the seizures we're having, like Teltros, Fed, and reverse. And what the hell is that? Who can read that thing? No one. So what it says is that what we have in here is a problem. We shouldn't have that in a normal market. So it means the market doesn't know where to go. The market is heavy tension. And we have this on all the markets. We can see the tension in the euro area. We can definitely see this tension. There's just one market in the world that isn't pricing that tension. It's Wall Street. In Wall Street, it's just pure calm and blue sky. So guess what? The clouds are there, and I damn hope they're not going to storm. They're not going to trigger a storm or a tempest out there. And the problem is, I think this is what's about to come. So let's see if I was right, wrong. I'll tell you anytime I do something relevant with my trading strategies.